say go live on one, a few seconds delay, then YouTube also gives me the chance. And looks like I have people waiting. So going live here, popping on up. I got WEBULL open already. I got CoinMarketCap ready to go. I have some of the earnings from yesterday from Apple, Google, and Microsoft, since they're the ones that I brought up yesterday, talking about, their earnings and how they were expected to be great. And guess what? They were all great. There were beats across all three of them. And then it was about the guidance that we had for the second half of 2021, or in Apple's case, the lack thereof. So we'll take a look at those. China, a lot of the Chinese stocks that we had a big sell-off yesterday. Today we see a little bit of a bounce back for those. We'll see if that's something that continues to rally over time, or if over the next few months we continue to get that trouble from China for trying to penalize companies that are publicly traded on the New York Stock Exchange, trying to bring more to the Hang Seng instead. So we'll have to watch as that plays out. So if you guys are watching, feel free to greet me in the comments here. And if there's anything specific you want to make sure that I talk about or that we take a look at, make sure that you mention that too. And anything else conversational, what the heck. Good morning to you, Jay. Great to have you on here. Let me see. So what do we got? We have about a little over 11 minutes until the market opens here. I got Lee Motors up. 7% gain in the pre-market that we have over. There's yesterday's drop that we see, and let's go down to the 30-minute chart so we can see the intraday stuff, and we can see really how it's bouncing off of those lows from yesterday. So you can see yesterday, huge sell-off, finding support around that $26 mark. So we could go back out to the daily chart and see what sort of key level that $26 is. This is not specific news for Lee Motors. This is just, a lot of drama that we have coming out of China itself that is causing trouble for the publicly traded Chinese companies that we have on the New York Stock Exchange. And that's just something that over the next few months we're going to have to watch play out. And if you have those Chinese companies, like if you had Baba or JD, or I believe Futu is also another one of them that's out there. I'd be remiss if I didn't mention Neo and Xpeng, because EV plays just like what we have for Lee here. DD also is very infamous right now with everything that's going on with China. So those are things that we want to watch to see how they play out, and really keep an ear to the ground over what's going on in China with moving things over to the Hong Kong Stock Exchange that we have over there, and what's going on with those stocks in general. So 26-ish dollars, a little over 26 is where we found support. Let's go back out to the daily chart. We'll see how that's going. So on the daily chart, $26. All right. It actually brought us down decently below the 200-day. Zoom out a little bit more here. Took us down to this low. When was this low? This is all the way back in December where we had that low, and across the top here. Nope, I was wrong. I moved my cursor too much. This little pop that we had here when we bounced just a little bit before returning on the way down. And so that was back in April. So max sell pressure that we saw through growth in EV with the tech plays over time took us down just under $16 per share. So we're still up considerably from then. And so this is one that would have significant room to fall if it was something that would be fall into the sights of the Chinese government. So I don't know that it will, but that's something that is causing these sort of drops of the Chinese company, is that, that uncertainty and the doubt that people have. Well, fear, uncertainty, and doubt, I guess, gets talked about a lot anymore. So those are things that are unsettling to people on a very fundamental and emotional level. So anytime that happens, we are creatures of habit and creatures of certainty. And when we don't have that certainty, it causes us to feel uneasy. And when it comes to investments, we can see that unease show up on the chart. So that's just something to be aware of. Covering GNOG in past videos, what are your thoughts on it? I believe price right around 27. Chris, I'll get to GNOG in just a second. Hello, Marshall. Great to have you. And Taco, Baba is back. All right. So let's visit GNOG real quick. There we go. All right. So the nice thing about GNOG right now, so let's zoom out a little bit. So GNOG is still on this downtrend that we see here. It hasn't recovered the way that other stocks have. This is a smaller play, and really, it's one of those places where just the results are waiting to be seen. And if we zoom out a little bit more, we get to see these early days over here. When we were in that SPAC type territory before they became GNOG, and then they had a significant run up to $27 per share, and now we haven't ever come back down to that $10 level since that sell-off. We're still trading above it, and we can see that we find support right around that $11 mark. As a matter of fact, a pretty darn good support around that $11 mark, and then we have about a 10% downside to take us back down to this previous low that we had, this more recent low. You can see the 200-day has gone negative. We already had that cross with the 50-day moving down below it, and that has also flattened out since then. You can check out the RSI. We did peak back here, and then since then it's dropped down and dropped under 50. It's become bearish. We hit just a moment back here where it's reported as oversold, and then not much going on. The momentum indicators are going to be not great here because there's really no momentum in it. And right now, this is a very boring time for Golden Nugget. So when you watch this price action play out, and the fact that we are trading under the moving averages and really slope there, this one is flattening out just a little bit. So we have a lot of bearish indication when we look at this. So if you look at the analyst estimates, we have 4 analysts covering it. So not a lot of coverage, but we got some decent coverage. The average is currently coming out to $24, and 20 to 28 is where we're at on either side of that. Out of the 4 analysts, it's either a buy or it's a strong buy. It's split right down the middle for that. News, let me see. Really, we have a lot of competition coming into this space. So Golden Nugget came into this knowing their place in the competition, and they've done well in Michigan, and they did pretty well in New Jersey. I don't think that we've had any news about Pennsylvania yet, and really waiting for results for how they're performing in Pennsylvania. And I would have to check their PR because it's been a while since I looked at this one. But we want, let me see, this is all the way back on the 8th of July where we had that $27 price target. And this was Chris who brought that up. So yeah, very recently we have that, and that would give us still 2x potential on GNOG. I still have my position in this. I'm still bullish on GNOG. It's just one that I need to update myself in the past couple months here as to how we're doing for this. This might be something that, as I read more about it, I could see it as a definite opportunity for dollar cost averaging. And even before I read that, just looking at the chart and looking at the support that we're finding here right around that $11 mark is really good for thinking about it in ways that a lot of the risk has come out of the price for Golden Nugget moving forward. And really seeing what's behind those analyst estimates is going to be something, to see what they're shooting for, how they see the price playing out over time. And a lot of it probably has to do with the legalization across the United States, throughout the different states. So those sort of openings, and then market penetration also plays a part in that. And along with that is competition, how they fare against other companies that have online gambling as well. And even though they're smaller, they're still expected to do well. Let me see what time we have. Okay, we have 4 minutes until the market opens. So let me go to tip ranks here. There we go. So here on tip ranks, they're saying 3 ratings versus the 4 that we had on WEBULL, probably because one of them is old enough that it sort of has fallen off as something that would be in the scope of relevance anymore. So this will load up here in just a second, but you can see $25 as the average analyst estimate, 100% upside. So there's that 2x potential. And what we don't see a lot right now with how prices are, we don't see a lot of the stocks that we had back in January that we're talking about with 2x potential that actually reached that 2x potential, even up to as far as mid-February before the sell-off. A lot of those stocks have regained, have actually 2x from where they had fallen down to in the middle of May. And then, finally we have a little bit of settling. And I was saying back in early June to mid-June, whether it was on YouTube or whether it was in my Discord that's through my Patreon, link for that's down in the description, by the way, if you guys want to check it out. I was just saying that nothing's cheap right now. That's what I was saying back in June. I said nothing's really all that cheap right now. That there's a lot of prices that are up, and finding those deals. It's a matter of either waiting for things to come back down or finding the deals that yet remain. And GNOG could be one of those that's still just sort of hanging out and waiting. You can see 2 months ago we got Jeffries coming at 28, and then what do we have here? Benchmark code $20. So we have two almost 5-star analysts coming out. So 52% rate with a 17% return, and 58% success rate with a over 21% return, both giving buy ratings, both giving huge upsides. So over 2x potential from where it currently sits 20 days ago and 2 months ago. So really, I'll dig around the internet and see what I can find to see what they have to say about what's coming out for GNOG, and then also checking that news on Pennsylvania, because Pennsylvania is actually fairly huge for gambling itself. And so for them doing well, Michigan, New Jersey, and Pennsylvania are 3 very key states when it comes to gambling. As a matter of fact, there's a lot of gambling that's done in those states. Even though we're waiting for further state legalization, there's still a majority, not a majority, don't let me use that word. There's still a huge amount, a large percentage of the gambling that happens in just a few states versus 50 states overall. All right. So I just want to check the time here, 9:28. So we're almost at market open. So those are my thoughts on FYI. All right, perfect. So let me see. Baba. Alibaba. Alibaba is Baba back. All right, so up almost 3% the pre-market here. Look at that fall off that Alibaba's had. Wow, trading down as low as like almost just under $180 per share. They've had quite the sell-off as well. So they were up over 300, and they've lost like 40% of their price since then, up to yesterday's close. Okay. So you can see I talked about this. I think this was back in my Discord. Somebody was asking about it. That's why I have these notes here that they needed to expand this gap, and that's when this price came up. And you can see that we did not fill that gap. We failed to fill that gap, and so because we failed to fill it, well, then we just happened to drop off from there. And then where does support come in for this? We are, wow, okay, we're way back to March 2020 levels. So it could be significant upside from here. We could see a significant bounce for it. There we got the market open. Let's go down to intraday for Alibaba. Oh, no, you can't see my chart. Okay, I totally misread that. My goodness. Give me 1 second here. All right. So that should come up in just a moment here. There we go. All right. So now you can see my chart. And thank you so much for your comment. I don't often look at my own screen that shows me what's going on. So now there we go. So Matthew, thank you for that. And I totally thought it said, we can't wait to see your chart. And I was trying to figure out what that meant. But then I read it again and I said, you can't see my chart. So now it should be visible. You should see WEBULL up here on your screen. And we can see the where we bounced off of for Alibaba. So back in March, the end of March of last year, coming down to almost $170 a share, Alibaba has tumbled almost back down to that at its low point yesterday. And so when you retest those sort of lows, is this news coming out of China? Is it bad enough that it pushes us down and drops us further than what we saw when the pandemic first really started being seriously impactful? I mean, I'm not sure of the exact date that it was considered a pandemic, but really at like peak fear in the markets when we had a lot of the shutdowns and the closings, Alibaba selling right off with it. That's sort of where Alibaba pretty much came back to. So it's not one that I follow closely, but just from a technical standpoint, there's a significant amount of risk that has come out of their share price compared to where we were at when we went almost up to $320. Brooke, I don't follow a lot of the Canadian companies. I predominantly follow the U.S. companies. there are some companies that are out of Canada that people ask me about. I think Sundial is one of them that comes out of Canada, and that's somebody in my Patreon in Discord we've talked a lot over time, especially when that was really moving with a lot of momentum. That was one, and I've even done a couple of day trades on that one and a couple swing trades on that one. But as far as the Canadian companies, I should probably get more foreign exposure in general. But yeah, Canada, I don't really have a lot for what's going on in Canada. All right, let's take a look and see what's moving here. All right, so Life Sciences, Marathon Digital back up again. So, okay, they're moving back up, Mara and Riot. EVFM making a little bit of headway again. I wonder how far they've fallen. I'll have to take a look at that one. CCL, NCLH. All right. So I did mention the FOMC and Jerome. FOMC comes out with their announcement at 2 o'clock. Jerome starts making his comments at 2:30 today. And the market, I wouldn't be surprised if the market's a little bit crazy around that time, or if it's crazy today, just from now leading up to that time. You know, I would expect pretty much anything. And we're looking for their financial policy. Is there going to be financial tightening? Are they going to, what do they see as far as inflation goes? There we go. And then, also, for the tapering, when are they considering tapering? How soon is tapering going to happen? Really, if they give us any sort of news outside of the status quo, that could be good. And if they think that inflation, if they continue to push the narrative that inflation is transitory, and we should expect it to drop again soon, that's going to be excellent for our growth companies. Wish Cloud. This is WEBULL that I'm using. WE here. I'll put it in the comments here. There is a referral link, which in the description for my video, so you can click that, and then you can sign up for it. Well, you can sign up for it any way you want to, but if you want to help support my channel and what I do here, you're signing up the same way, you're depositing your money the same way, you get free stuff the same way. The only difference with the referral link is that I also get a couple free shares as a result, and it's a nice thank you. So if you want to go about it that way, perfect. If you like the application that you see in front of you, I really do like the user interface on it. I think it's really clean, and I think they're getting a little bit more robust all the time with it. So I just want to check in with Encel. Geez, have another sip of coffee. There we go. Yeah, WEBULL isn't available everywhere, Wish Cloud. So I know a couple people that are based out of Europe, and they wish that they could get a hold of WEBULL, and they just can't get a hold of WEBULL because it's not available in their region either. But if you can, it's a nice one. And if you can't, well, there's lots of other really nice ones that are out there too. So back to NCLH. So the cruise lines, those are, boy, they've been beaten up. And so finally, there's been a lot of news in Norwegian. I think they were just able to default Tuesday. Yeah, we know that. I'm looking for the news that said about actually setting sail with one of their cruises. Yeah, lots of court stuff with the different restrictions on sailing and everything like that. I remember reading that one about the let me see, restrictions on cruises in wind for Florida. Yeah, so tough time getting back to sailing. They took on a huge amount of debt, so making it back to where they were pre-pandemic. They're just not the same company as they were because of the things that they've had to do to decrease their costs. So, I mean, you can see where Norwegian was up near, they peaked at $60 per share. So we'll go more in the middle of that. It's like, we'll just call it low 50s is where they were trading. And now they're trading still at about half that. And should we have recovery, like when we look back here, back to June of last year, prior to the resurgence of COVID, where we started seeing the numbers spiking again, because we thought it would subside as we got into summertime and warmer weather, and then we just found out, it is likely here to stay longer. We got more delays and more delays and more delays, and so the cash burn rates were just brutal for all the cruise lines. RCL, Royal Caribbean, is actually one that's expected to do really well comparatively speaking to the other cruise lines. So if I had to pick out of all of them, I really do like Norwegian. And because of the multiples that I felt like it was capable of at the time that I invested, that's the one that I went with. It looks like 80, 123. So there's still like about a 50% upside to get back where they were pre-pandemic. And they have made quite the climb, and it's just been struggling for them. And they're going to continue to have volatility, and eventually they're going to rotate out of this. It's just a matter of, can they survive bankruptcy? And I think the big names will, and I think RCL is poised to be one of the best ones out there for that. Good morning, Sean. All right, let's look at some of the other stuff. So, check on our friend SoFi. SoFi actually dropped just a little bit below, and check out. Let me zoom this way. Woo. There we go. So strong support just under $15 for SoFi. So the fact that it's near $15 right now, there's a lot of risk that has also come out of this over time. We are trading below the 50-day. So that is a bearish signal for us, and it has flattened out. We don't have that positive slope. But if we go back here, back to May, this thing ran up to almost $25 a share. And if we go about the middle of that, so like $22. So we can go 50% upside just to get around those levels that we were at before. I believe there's a banking charter on the horizon for SoFi if they're eligible for that. We could see a lot of movement out of that, a lot of growth out of that. And as I've said before, the debate is still out there. Have they already hit their period of rapid growth for the business prior to becoming publicly traded, or is that growth yet ahead of them? So really working through that and showing those results is what we're going to see. We had a double top resist here at 16-ish, mid-16s. So yeah, not so bad. But for SoFi, I did take a really tiny position in this just because a lot of the risk did come out of it. And I do believe that it does have some upside potential. We'll see if that pans out over time for me. I think my cost basis is like 15.13. So I have 6 cents per share. So I think that might come out to, I don't know, like $1 over the little position that I took on that one. So I do like SoFi though. All right. I just want to make sure I'm keeping up with the comments here. What else do we have moving? We'll see how NEO did yesterday, since we already took a look at Lee. There we go. All right, so they're currently trading right around $40 per share. And as I've mentioned in the past, below 40, I think is a good place. And you can see they bottomed out at under $39 yesterday, 38.66. So below 40, a great opportunity. As a matter of fact, if you believe in the people who say the $60 to $70 end of year, if you're one of those people who believes those numbers, let's just go at 60 because that's a 50% upside from right now. For NEO, the EV leader over in China, and highly popular vehicles, and just continues to do well over time. It is one of those Chinese companies, goes along with the Chinese news. It is going to struggle for a little bit of time. Will they be penalized in some way by the Chinese government for trading on the New York Stock Exchange? Being that they already back NEO, I think that it would send a mixed message to back them, but also penalize them. I don't know that we'll see it under the same scrutiny as some of the other companies. We'll have to watch and see how that plays out. But I do love NEO as a company, and I hope that they continue to do well and that they weather this storm that we have currently going for them. So below 40 right now, not bad. Below 40, great. And 35-ish or below that would be absolutely excellent. And that's assuming that this storm blows over for them, and that it doesn't negatively impact them. All right, let's see what else we got here. Checking on our friend Lucid. All right, so still about mid 25s, and I think low to mid 25s is about right for Lucid for right now. As I said before, and I said this back on Monday, the 26th, that low to mid 20s would be good for right now. And then by the end of the year, especially as they start to hit their production and we start to see those production numbers and we start to see more of the demand moving up to mid to high 20s, possibly even up to $30 might be a little bit more appropriate. So on Monday, just despite me, the market took it up almost to $29 per share. So let's go out to the daily chart for them. DD. We'll check out DD in just a moment here. All right, so I drew this this line of support for how the lows were trending, and I actually made it a ray, so it extends to infinity. And you can see we broke below that, and I also had this line right here drawn for resistance, and well, we popped up above that. So we're currently above the 200-day and the 50-day. So we're in bullish territory, and this is a lot of volatility that now that they are lucid, that they're no longer CCIV, and it's still weird to me not to say CCIV. But now that they're lucid, seeing this trade sideways and some of that volatility settle, so we could find a nice base of support would be very comforting. I don't know if we'll ever get that comfort, but it would be nice to have it. We could find it across this line that was previously resistance. Now that we're above it, it really could act as support for it. It's kind of the I would say this backwards. The ceiling becomes the floor. I almost said the floor becomes the ceiling, but that's the other way. That's when a line of support, you drop below it, and now it's a line of resistance. So in any case, making sure I had my analogy correctly, there's that low to mid 20s that I talked about, and we'll see how well we find support there. All right, let's check out. Jab says DD. So in the comments, I don't know, you guys ever watch Dexter's Laboratory? I mean, for me, I'm in my my late 30s, and so I think I was maybe an early teen when that show came out. But his sister in Dexter's Laboratory was named Dee Dee, and he did not speak very nicely to her. I don't know that I will look at that sell-off. Yikes. So where were they at? Where was that high? $18. From when they hit the New York Stock Exchange on June the 30th, down to $8. So they are down over 50%. So $11 out. Ooh, yikes. They almost hit 60% down, going from the top to the bottom in very short order. That's rough. All right. And then we're not going to see too much from the momentum indicators. DD could be fast gainer for risk tolerant traders. This is coming out of tip ranks. So I'm going to speak about this carefully here. So could be a fast gain for risk tolerant traders. I think that when people look at the upside, and when there's a significant upside, we get excited about it. And sometimes that excitement causes us to be a little bit blind to the risks that we look at. And so when they say risk tolerant traders, there could be significant upside, yes, but remember, big risk, big reward also goes to big risk. So even though there could be a significant upside, that also implies that there could be significant downside as well. And I don't know that as many people are as risk tolerant as they think they are. For me, risk tolerance, what it does, if I think that something is really risky, but I still want to invest in it, then I'm like, I'm really pretty certain that this is going to take a significant bounce. It's going to rebound. It's really just, it's going to go up significantly from here. And that is my fundamental and core belief about it. However, it's still highly risky. There's still that chance that I could be wrong. Well, then I invest less. So if I have that much conviction that it's going to go, but that risk is really high, I will invest less, because when it comes to risk tolerance, for small amounts, I have a fair risk tolerance. It's actually pretty good, because I say to myself, if this goes to zero, then what? If this goes to zero, not much changes for me, and so it's not some crushing fear. It doesn't cause me to lose sleep. And so, I can live with myself for that, because it doesn't really compromise me financially, and sometimes those risks pay off really well. And then there's some other times that I was wrong and I take a significant loss on it. And while I don't like it, usually the safer plays that I made and ones that did not have that same risk were enough to cover it. So Wow, yeah. So I agree with what Tip Rank said. There could be significant upside from here. That's assuming that they come out of this pretty clean. So if they come out of this pretty clean and they regain some of that hype that they had before, even if they only come back up here, we can still see, 40% up from here, a 40% upside. But then, like I said, if you're going for a 40% upside in short order, then you got to watch that downside too. There you go. Samir, it's good to have you, buddy. So let me see. Go down through here. Materials, SoFi, Coda, Clover Health, MH. Palantir we haven't looked at in a while. There we go. So I had these lines drawn on here before for Palantir. Couldn't tell you when I drew them. However, we have them on here. And let me see. $21 per share. So currently sitting at 22. So what's that? About 5% up from where it's at right now. We have a 200-day finally. We had the 50-day, and we are trading below them, positively sloped. We could see something turn around for them. Really, I think it's going to be next earnings before we actually see something come out for them. Analyst estimates, it is running a little bit rich compared to the analyst estimates that we have right now. And you can see that out of the 10 analysts, we have one that says strong buy, one that says to buy it. So that's out of 2. So 80% of them hold, underperform, or sell, but across the 3 of those. So we'll see how they play out over time. For Palantir, their employee compensation packages that include options to the company is a significant headwind for Palantir. Their business model change, where they lowered the barrier for entry from companies to be only the richest of companies could really afford to experience their software, really making it so that more can experience it, and switching to lower barriers for entry should be really good things for Palantir moving forward. It's going to be a couple of years before it pays off, if it is going to pay off. So we'll just have to watch that. And if it trades sideways for a while, and if it holds that price above $20, and as long as we have that progress and that growth coming out of Palantir, pardon me, too much talking. As long as we continue to have that sort of support coming out of it and the growth going along with it, and if they slow down their how generous they've been with giving their employees options as compensation and stocks as compensation, because that's only fairness to the shareholders themselves, to slow that down, because that could be a lot of dilution in the future. So that's just one of the headwinds that we have. But showing that growth could be a tailwind over time, and showing that support at that $20 mark could also be significant for us. We'll be taking a look at Pfizer. We have not taken a look at Pfizer recently. There we go. All right. Well, looks like Pfizer's moving along. Let me see. They traded sideways for a while, and then July 9th, they've really taken off since then. Is that around the time that we got the report on the Delta variant? That Pfizer is, let me scroll down. Lots of news coming out about Pfizer. Bigger companies, so you get a lot more coverage. So the 9th would be a while ago. So I believe Pfizer and Moderna are both, and you can fact check this for me. You can let me know in the comments, but I believe that they were both shown to be effective against the Delta variant. Let me see. World Health Organization backing the mRNA-based COVID-19 vaccines. Still in performance market. Booster update. No evidence of COVID booster shot necessary. All right. So I don't see anything about Delta variant, and there we go, that sort of performance. But the news seems to be pretty positive. Let's look at the analyst estimates for this one. $43 per share. So we're hitting around that. 2/3 say hold. So what's this out of 24 analysts? So that's 2/3 of 24 is 16. And so we have 6 and then 2 between buy and strong buy. Let's go to tip ranks on Pfizer. No problem, Bernard. All right, so for tip ranks, there we go. Bank of America, we have 1-star analyst coming out here. Let me see. 41, hold, buy it last month. Okay. So the more recent ones put the price that they have over the next 12 months to be about right where it is. And so they say about a 3% upside. And then the high was 55. When did that one come in? That was 2 months ago from Argus Research. So 28% upside. Pfizer's a big company. It's going to take a decent amount to move it over time. So we're not going to see the same huge jumps that we might see with some other companies, but they have had a fairly incredible run from where they were at back in June. So up another 10% from there. Resistance around 45. Wow, they've really had a ramp up since the vaccine came out. So we'll see. It looks like it ran up a little bit from here. There could be buying opportunities where it's going to come back down a little bit. If you're looking for, in my opinion, my opinion is just my opinion. That's all it is. Definitely not financial advice because I'm not licensed to give financial advice. So if this should tumble off of that 43 and it's a company that you would like to invest in, you could have those buying opportunities. It could come back to like that $40 per share. It does look like it's running a little bit rich right now compared to the 12-month estimates that are out there. So we're currently trading pretty much at that average already. For me, if I was going to take a position, I would like to see it below even the lowest of the 12-month estimates if I could. All right, what do we got? Doc moving in the right direction. All right. I also want to take a look at the markets real quick. There we go. We'll pop this out. All right. So the S&P down at 0.15%, down 0.13, NASDAQ up 0.23. All right. So about the middle, like I said, I expect anything leading up to FOMC and Jerome. I don't know if we're going to have big news. I don't know that anything's really all that expected coming out of them, whether it's if it's about the inflation rate or if it's about their monetary policies, if there's going to be any changes in their tune about whether or not they're going to change what they're currently doing anytime soon, or if they're just thinking about it versus planning on tightening monetary policies. So those we want to listen for that. We want to listen to inflation, and so then we'll find out about bond rates, and we'll also find out how our growth companies are going to be impacted. Well, at least what the FOMC take is on it anyway, and that's at 2 o'clock is when the announcements come out from the FOMC, and then 2:30 for Jerome. So around that time, maybe we'll see a little bit more market volatility, but it could be that we started to know what to expect a little bit more. Maybe it won't be as volatile as it was a few months ago. So like that February to May time period, that 3 months, we're watching all of the high growth stuff falling so quickly. Then it seemed to be a lot more impactful. Now that we've sort of recovered a little bit, it seems not to rock us as much, but we'll have to wait and see. All right, Digital Turbine keeps dancing around that 200-day moving average below the 50-day. And inflation will affect them as well, washing out future growth, of course. This is one that I've talked about before and one that I just like to keep tabs on. And I thought maybe over these past 2 days, let me see here. This was yesterday and low price 58.94. And then today, the low is $60.50. It's actually stayed above 60. So $60 seems to be, that 58 to 60 seems to be where we're finding those more recent lows and finding some support. I would like to see it pop back up above both of these moving averages. more into bullish territory. But even when you take a look at the RSI, the momentum's out of it. Now we're sort of trading down below 50 on the RSI. So down here, and these are, like I said, momentum indicators. So when we get sideways trading like this, you can't look at the MACD the same way and say, yes, well, what we have right here is a buy signal. Because when it does trade sideways, when you don't have that strongly trending stock, then you can get false signals. So we don't know the signal line crossing the MACD line crossing the signal line doesn't necessarily mean go ahead and buy this right now, because we just need more indication of what we see here as well. All right, we haven't looked at crypto yet. Things in upcoming inflation. Still dancing near 40. All right, so to address John's question real quick before I get into this. Oh, and Jazz, I didn't see what you said about Spotify. All right, we'll also look at Spotify. So inflation, I think, is going to continue to be an annoyance over the next couple months, but we should start to see it turn back around. I expect it to settle down over time, and to be a little bit more normal to what we're used to, closer to that 2% inflation rate. How fast we get there, as we go into August, do we see the same, or do we see it dropping? I don't know that as we go into August that we're going to see, that continued spiking that we saw. If it does go up, I don't want it to go up as much. If it's the same or lower, then I think that we're in really good shape to start to see things settle for inflation over time. If it goes up a lot, if it goes up more than we've already seen it go up, then that would be bad news. So just in short, those are my thoughts on inflation. So I have to be a little bit more aware of the time today. I see that it's 1 minute away from that 10 o'clock hour, which is really when I intend to end this. But I'll go on for about 5 more minutes here. So a little bit of coverage on crypto here. So Bitcoin is actually looking very bullish right now. The fact that it's staying so darn close to that $40,000 mark, and it's popped up above it just a little bit recently, and then it comes back down into the 30s. But we have that upward pressure on it, and there's a lot of institutional investment, and there's a lot of big money, and there's a lot of momentum going into Bitcoin, and the price action, we still have it somewhat muted, keeping us pressed down below that $40,000 mark. This is looking like it's going to break up above it, especially if this one right here stays nice and narrow for us, or if it goes green. Going green would be even better, because being that inverted hammer candle that we have right now, it could be a sign that it's going to resist. It's going to tumble back down. If it does, we want it to stay up above this 50-day moving average that we have right here. Preferably, if it does come back down, that it stays up above that $36,000 mark that we see right around the bottom of these candles. But it does look like it is possible that it will push up above that 40,000 sometime soon. We'll see if the buying pressure can outweigh the selling pressure, and that those bulls went out over the bears. Quick stop Ethereum. Alan, I do that all the time. There you go. All right, similar looking chart. We can see that we're still bumping up against resistance, but for Ethereum, it's more like that $2,400 mark. Actually, if we go down here to that 23-ish, or so like 23 to 2,400 for area of resistance that we have, and we have still significant upward pressure. However, we are trading up above the 200-day and the 50-day. RSI is up above 50. That's good. It is possible that we're starting to see a bullish pennant, sort of, or bullish flag, sort of like what we had with Bitcoin, where it could break in either direction, but typically this could be indicators that we're going to break to the upside. And if we do, we actually have a fair amount of room to run. We have room up to about $2,500 to $2,600 for Ethereum in the short term. And I've already expressed my views multiple times over on how I feel that Ethereum is going to do in the long run. I think especially EIP 1559, by the way, it's exactly 1 week away. It's supposed to come out on Wednesday, August the 4th, which I believe is a week from today. So unless I have the calendar screwed up in my head that it's not Wednesday of next week, today should be that 7-day mark before that hits. So we get the base fee burn. People, if they want to expedite the transactions, I believe that they can tip the miners that are out there in order to give priority to those transactions. So that way it benefits the proof of work miners that we have that are helping to my goodness, I hate it when I blank on those things. My mind switches to something else, and then I forget what I was saying. It's just part of being who I am. So proof of work being the consensus algorithm that they currently use, and those miners being the ones that are keeping that security and the stabilization of the Ethereum network. In the meantime, they should do. I think they'll still do pretty well from the tipping, even with the base fee burn that we have. And time will tell whether or not we actually see it as a deflationary asset over time as we move to proof of stake and sharding. It could be an incredible run for Ethereum. It's one of the reasons why it's my favorite. There we go. Woo! Jazz tosses out Spotify. Look at that gap down on Spotify. My goodness. So that brings us down to where we were at. Where is back in here? Okay, so May, and then don't know what happened on May the 19th. That's a few days later, 6 days later than that May 13th low that we saw for a lot of other stocks. But we're getting close to that. So big sell-off. They were up close to $400 on one of those days in the past. Let's bring it down to right around there just to subtract out some of that volatility, even if we go off the moving average that we have right here for the 50-day of like $330 per share. So another one that's lost over 30% of its value to date. What's the news on this? One day ago, number earnings. There we go. Earnings before Wednesday's open. So I wonder if their earnings did not go well for them today. So this could be something that came out of their earnings. I'm short on time, so it's going to have to be something I take a look at later. But if the earnings were underwhelming, then we could always take a look to see what they have to say about their guidance moving forward. So what they plan to do to improve to ensure that they turn around to be more growth. And check out that oversold on the RSI. Talk about strongly trending. We are well below 30 on the RSI. Let me get my cursor on it. It's running about 9. This could be something that bounces pretty significantly. So using this as an intraday trade or a swing trade play, something that's going to recover a little bit over time after some of that shock has come off of it. That could definitely be something over the short term that could work out very favorably. But you also have to be careful. Like I said, I don't want to put out everything in sunshine and rainbows. That even though that could work out very well by taking advantage of that bounce, that often happens when you have a sell-off like this. You could also be trying to catch the falling knife and end up getting cut pretty bad. So just be careful that timing that market is pretty difficult. So when you see a drop like that, there's nothing that says that it won't keep on dropping. But we are back to almost those May lows that we saw. So having those May lows, having that line of support. If I was going to do this as a day trade or even as a swing trade, I might make. I mean, I'd have to look at the percentages and everything on it, but I might make it so that I would fall just a few dollars or maybe probably a few dollars because it's $211. There we go. And so if I let that drop, so if I was thinking that this was going to make let me see. If I thought this was going to make like a 20% bounce, that'd be $40. That would put us way up there into the 250s. That'd be a very significant bounce. So maybe I would be looking for some sort of closer support that we would have. We do have a gap in here, and should they bounce and should they recover over time, popping back up over that and spanning that gap to make it up over that time would be important for us. Really what I would do is I'd look at the downside risk that I'd be taking and where I would set my stop at, and I would be doubling that downside risk for the upside. And if I don't think that it can make it to be 2-to-1 for risk reward ratio, where I'm looking for double the reward versus only 1 times of that risk. So 10% down versus 20% up, or 5% down, it'd have to be 10% up. You get the picture. Those would be things that I would think of. But when I look intraday on this, and where we have this price wall on level 2. Level 2, we have a price wall right now for support at about $215. Lots of buy side pressure supporting that from what we can see in the level 2. So this could be one of those times that it starts to settle a little bit, especially because we're past that pre-market sell-off that it had, and after that opening bell sell-off that had it over the first half hour. So from here, a lot of that shock might be out of it, where we start to see people trying to take advantage of that low price that it hit. So you'd also want to check the earnings on it and see what's going on there. Thank you, John. I appreciate it. Tilray and Sundial. I'm going to go to Sundial first just because I know a little bit more about their price action. Wow. Well, if it's Tilray and Sundial, then there must be something, because they are cannabis stocks, so something that would affect the industry. Okay. So you're not doing too bad. They almost made it up to 90 cents. For a while, this is one that when I saw it drop below $1, I would use it as a swing trade play, or sometimes I did it even as a day trade if I thought it was going to work out that way. And that did happen to work. It has been settling. We see a lot of sideways trading for it recently, and it has been trading below the 200-day. Finally popped back up above it today. Wonder what the news is on it. Okay, DJ sent a race to sector perform versus from underperform by ATB Capital. Good. So they got an upgrade. Perfect. Bullish sentiment pumps cannabis, stops Tilray, Sundial, Aurora, GrowGen on cannabis movers. Okay, perfect. So this looks like it's coming out of yesterday from Benzinga. And so let's go to Tilray. Wow. Yeah, that was quite a sell-off for Tilray. So this chart, I mean, if you remember what Sundial's look like, Tilray's looks fairly similar, almost identical to the shape that we saw with Sundial. And they are coming up, and they just gave a little smooch to resistance right there, just over the $16 mark. And now it's sort of settling a little bit. So cannabis is going to continue to be an area where you're looking for momentum over the short term. As far as long-term plays, I don't follow the cannabis markets, so I can't speak specifically about the long-term outlook for them. There's still a lot of debate in the United States. If the United States at the federal level starts really talking legalization, and starts to actually put things into motion to give broad legalization throughout the United States, it could be very well for the cannabis companies that trade on the New York Stock Exchange in the U.S. stock market. So yeah, we'll have to watch and see how it plays out over time. All right, guys, I'm going to start closing things up here. So if there's anything else you'd like to say in the comments, please do so. In the meantime, I want to take a look at what's not up for the day, the stuff that's down for the day. AMC down about 4%, Royal Caribbean down about 2%, Polygon settling a little bit. I'll stop by Polygon. I didn't spell it right. There we go. All right, so Polygon. Wow, I didn't realize that they bottomed out at 62 cents. I saw it when it was around 70 cents, and I think I was able to load up on some around 70 cents, and I think I was also in it for some of it at 85 cents. Seeing this below $1, I thought was incredible. And as a matter of fact, right now it's trading at about $1, which I think is pretty good for it. Very popular layer 2 solution that we have as a side chain to the Ethereum network. Highly efficient, not as decentralized as what you get through Ethereum itself. Really good layer 2 scalability solution that we have coming from Polygon, and lots of adoption moving for it. So I think that the movement that we see right here is merited following this sell-off that we had. And let me zoom out just a little bit. All right. And let's actually go to coin market cap, because we're going to see a little bit more there. Very nice, Wish Cloud. Thank you very much. Yeah, the cannabis stocks, when they move, they tend to move together. Usually good news for one is good news for all of them. There you go. So the token on for Polygon is well, it used to be the Matic network, so their token is Matic, but Polygon is the name that they changed to, and it says that they're rebranding. It said that for a while now. There we go. Not exactly sure what I clicked on there. I thought I clicked on their trading view chart. It should be popping up here for us in a moment. All right, not used to getting the same slowdowns. So like I was saying about Polygon, there we can see more of the price action for it. So very similar chart to what we see for Ethereum. So it's going to move with Ethereum. So Ethereum going back up. Polygon also goes back up. This is one that I think should be trading relatively higher than what it is right now. And we'll see if it moves with EIP 1559. And what we see in the current chart, zoom in this way, is this pretty little flag formation that we have. And we actually have decent volume support relative to what we saw during this sell-off time. For this to keep on pushing, the volume is starting to lose as the prices go higher. So some of that conviction could be going out of it. You know, we could see it come back down a little bit. If it does, let's keep hoping that it stays up above where it was at before. But I checked out for this. All the news that I read about Polygon, still very much, it's still more and more use coming out of it. Still very popular. So all good news, and yet the price action doesn't always reflect it. So, you know, there's a little bit of inconsistency there, but you can see even as I zoom out that we have decent volume spikes that go along with it. All right. Taco, Chinese stocks bounce. The Chinese stocks absolutely did bounce, and let's hope that that it's not that dead cat bounce that you see after strong sell-offs. Instead, let's hope that it's a little bit of that fear, uncertainty, and doubt having been realized, that now we're starting to breathe a little bit and digest the information, and those that strength comes right back to it. As I mentioned yesterday, that competition between the United States and China, it's just going to keep going because world leaders and the economy, you know, they go hand in hand. So strong economy, strong place globally and competitively, and there's always going to be tensions. There's always going to be some sort of drama that comes up every now and again. And it's just going to be the way that it goes. And if you're going to invest in the United States stocks or Chinese stocks, depending on where you live and what your perspective is, you know, you're just going to see that back and forth as long as they remain competitors with each other. So I'm going to wrap things up for now, guys. Thank you so much for coming out. It's been a great Wednesday. We'll keep an eye out on what the FOMC has to say and what Jerome Powell says about it, and you know, we'll talk about it in tomorrow's live stream. Let me see, was there anything else that I forgot to mention? I don't think so for the moment. Really appreciate the comments. Thank you guys for showing up, and we'll see you tomorrow. Have a great day.